How's it going, traders? Hope you're all well. Hope you all have had an amazing weekend. Pips of Persia here, coming to you with a weekly market outlook video, preparing for the trading week of 4th of March 2019 to 8th of March 2019. Now, before we get started, as usual, disclaimers. These setups are purely for educational purposes and by no means require any action. Your capital is at risk. You should never ever risk more than what you're willing to lose. Past profits do not guarantee future results. From the pairs that I will be analyzing, make sure to take notes, make sure to save some of the setups that you like, and keep an eye on them for the coming week. If your analysis disagrees with me for whatever reason, please stick to your own analysis and ignore mine. The reason why I say this is because this is the best way for you to learn how to trade, okay, through your own analysis. If your analysis goes right, then happy days, you were correct with your analysis and I was wrong. If your analysis goes the wrong way, then you know potentially what other stuff you could have looked for in order for you to change your analysis, in order for you to perhaps not have taken a loss on that given trade. With that being said, let's go ahead and get started. As usual, economical calendar for the coming week. We have quite a few high impact stuff for Australian dollar for this week, as you can see. A lot of Australian dollar news. And this week is indeed NFP week. So the whole week for the US dollar will be a little bit funny, but more importantly, on Friday, we have a lot of high impact news for US dollar. So definitely be careful, definitely keep your trades safe and keep an eye on FOREX Factory to inform yourself of different types of news coming out. Let's go ahead and get started. Now, I would actually like to potentially start with the US dollar weighted index for me to show you guys potentially what has happened since last week and what other stuff we can be looking out for. So last week we said we are forming this inverted left head right shoulder. We were waiting for the market to drop down to one of our key fib levels and potentially reverse, and this is exactly what happened. We have actually broken out of this higher trend line over there. More confirmation for a bullish move. However, we have tapped off this longer term trend line coming from before. And the market on the 4-hour time frame has more or less given us a shooting star formation over there. Okay, the very last candle is a shooting star. Now, that shooting star was formed exactly at the previous reversal zones that we can see over there. So I am going to expect potential decline down to retest the broken through trend line and then another potential bullish move again for the dollar for this week. Again, it does depend on NFP, it does depend on the dollar news that we have during the week, but it's definitely something you can keep an eye on. As soon as we close above all of these wicks, all of these zones over there, then you can completely assume that this minor bearish trend has completely shifted in momentum and has turned bullish. So that's why I'm going to majorly wait for a closure above that. But for now, I'm going to wait for a potential retracement and the continuation to the upside for US dollar for potentially Wednesday, Thursday, Friday. Now, by the way, the US 10-year yield also agrees since we finally ended up breaking out of that downtrend line as well. Key fib level as well was tapped off. So I'm expecting a potential decline, a potential retracement, and for the market to potentially complete this 1 to 2 to 3 to 4 to 5 move up. Okay, potentially something like this. Or we can get a 6 and 7, an 8 and 9 move up, like this. Your standard wave theory. So I'm going to remain bullish on the dollar for let's say the second half of this week. Now, let's go ahead and start with our pairs. Australian dollar against the Canadian dollar. Let some divergence come in play, 0 to 5 move channel, okay. We have this channel on the 4-hour time frame that the market is respecting very, very clearly. From the top of that channel, we have the 1 to 2 to 3, waiting for a potential 4 point to be created and to write down the 5th move. 4 to 5 move for us to write it down. Now this would give us another tap off of the trend line and the same reversal zone that was over there. All of these wicks, all of these massive moves down that happen around the 0.947 zone. So I'm expecting the market to climb up a little bit and for us to be able to have a very nice sell opportunity from the 4 to the 5 move down. Okay, definitely something to keep an eye on. Make sure you wait for, obviously, candlestick confirmations when the market reaches that zone. There's not much more to be said for Australian dollar against the Canadian dollar. Australian dollar against the Swiss franc, head and shoulder broken to the downside, some sort of pullback before further sells. So the head and shoulder that I'm talking about is on the 4-hour time frame. Our left shoulder is over there, the head is over there, right shoulder is over there. This blue line over here is my neckline. My neckline was finally broken to the downside impulsively. Not only that, this yellow line that you can see over here, where all the previous reversals have happened, was actually broken to the downside as well, meaning we ended up getting a closure below. So a few different scenarios. I can potentially wait for the market to tap off this next reversal zone over here and climb back up, break this, give us a retest of that for us to write it down. Or I can expect from where it is now, pull back to retest the trend line, or the neckline rather, and then the continuation to the downside. So I'm expecting some sort of a pullback before further sells come in play for Australian dollar against the Swiss franc. Now, as you can see, the 0.696 is my final take profit zone. And the reason behind that is your simple measured moves when it comes to head and shoulder formation, where you take the measured move from the top of the head to the neckline, and you take that and put it at wherever the market broke out of the neckline. We can see that that does bring me down to a little bit further down than 0.969, perhaps 0.964, around that zone. However, the reason why I've put it on 0.969 is because that also lines up with previous reversals over there. So I believe that could be a very nice sort of intraday trade, where, let's say, if we catch it at the break and retest of this zone over here, we can write it down very easily for 90 pips. Australian dollar, Japanese yen. On the 4-hour time frame, we have an evening star formation, which would be this bullish candle, small bullish or bearish candle, followed by a bearish candle. So these 3 candles, a 3-pin pattern, is an evening star, and this candle on its own is a shooting star, both of which are bearish reversal signals. We can see that the market is indeed creating higher highs, and it's a flat top triangle. Yes, in these cases, we do say it's more likely for the market to kind of break above and have continuation to the upside, and that could very much happen so long as Japanese yen still loses some strength and is on a decline. However, because of the Australian dollar weighted index, I am going to assume that this market will give us either a straight break and retest of this for the continuation to the downside, or we will get another tap over the trend line, a potential rise up, then the continuation to the downside, something like this. So I am going to remain bearish on this pair, even though we do have that kind of flat top triangle over there. It's just a matter of where we get a more kind of impulsive break. Yes, if I'm on the 4-hour time frame, I end up getting a kind of nice closure above that, nice closure above this zone, a clear closure above all of the previous closures or all of the previous wicks, then I'm going to assume that the market is indeed likely to continue to the upside. However, as of now, from what I can see with the candlestick formation and Australian dollar strength, rather Australian dollar weakness, to be honest, I believe the market is more likely to break to the downside. Australian dollar, New Zealand dollar. Now, this pair is something that I went through last week as well. However, it didn't really give us the move that I expected it to. It was more or less consolidating for the whole week. But to go through it again, we have this kind of channel where we have our 1 to 2 to 3, potential 4 move could be over there, waiting for the 5th move down. Or we can expect a more defined 4th move somewhere around there for the potential 5th move to come down. But I am going to remain bearish on Australian dollar, New Zealand dollar as well. We have this kind of trend line coming up, first touch, second touch, third touch over there. So again, scenarios, potential rise to the trend line again, and sell so long as you have good candlestick confirmations on top of that trend line down. Or you can wait for a break and retest of this trend line, or more importantly, the break and retest of the drawn zone over there for the continuation to the downside. This would be a very kind of nice trade to take, and the reason why I have marked this zone on the daily, if I'm not mistaken, yes, there's a lot of kind of reversals that has happened around the price that I've pinpointed over there. We can potentially change that price to 1.04 perhaps. That is definitely something we can keep an eye on as well. But I would personally rather keep it right at the bottom of that wick over there. All of the previous reversals have happened around there as well. So waiting for a nice sort of break and retest of either the trend line or the zone that I had marked out. That's Australian dollar against the New Zealand dollar. Canadian dollar against the Japanese yen. On the daily time frame, we have shooting star formation. On the 8-hour time frame, we have divergence. So this is a daily time frame, and that's the shooting star that I'm talking about. As we can see, the market wasn't really giving us any sort of impulsive move after this move down happened. It was very choppy, no strength in terms of bulls or bears. So the market was just kind of going up in a very choppy momentum. Then suddenly, on Friday, we got a long wick. We got almost a Maribozu closure over there. Okay, clear shooting star formation for me. Clear bearish reversal signal. We still haven't closed above this drawn trend line over there as well, where if I zoom out, you will see where I have drawn my trend line. 1 touch, 2 touch, 3 touches, break, and a potential retest of that, where we still haven't closed above that trend line. We actually tapped off the previous reversal zone over there. As you can see marked out, that zone was tapped off, double top formation. Very, very nice. On the 8-hour time frame, not only we've got a long wick over there, we've actually got a bearish engulfing candle as well. Major thing on the 8-hour that I've been looking at was the divergence that was created, and that divergence is from MACD, for MACD, basically MACD divergence, where we have a higher high being formed over there. On our MACD, we have a lower low being formed over there. So we have clear divergence in the market as well. That's, in my opinion, very, very likely to have a continuation to the downside. Very nice sell opportunities coming in play. One of my potential favorite setups for the coming week. We can ride it down to this trend line minimum for about 80 to 90 pips. If we get a break of this trend line, break and retest, then we can definitely ride it down longer for a potential swing trade rather than intraday. Euro US dollar. Again, another one of my favorite setups for this week. Daily shooting stars, grapes and doji, fib level, break structures with downside. Okay. So on the daily time frame, when you look at your Euro USD, these are the 2 candles that I'm looking at for the Thursday and Friday candle, where we have a gravestone doji over there and we have a shooting star candle over here. Very long wicks, very small bodies. Again, clear reversal signals. Very, very clear reversal signals. Now, I'm definitely going to keep these in mind, and I'm going to have a look at it for next week and see how the market kind of reacts to it. But I need to keep this into account as well, that those 2 wicks were created at a very key fib level, being our 61.8 level. I would have liked if the market climbed just a little bit higher to potentially tap off our 71 as well as the trend line. That didn't happen, not a big deal. So let me get rid of that trend line. We're going to strictly base it on price action and fib level. Even on the 8-hour time frame, we can see multiple long wicks, potential reversals to the downside. Now, when I zoom in, let's say on the 4-hour time frame, and I draw a smaller scale trend line coming up, I can see a clear break of this trend line to the downside, where this probably would be a better one, where we have first touch over there, second touch over there, multiple touches and reversals over there. Sudden shooting star over there on the 4-hour time frame, market collapsed, came back for the retest, also gave me a very long wick over there as well. Very, very likely for the market to go down, in my personal opinion. So, again, wait to see whether you get some sort of a pullback before entering, some sort of a reaction off of the levels that the market has tapped off. But this is a very nice intraday trade. In my opinion, it will actually drop below the trend line that we have, so it could be a very nice 50 to 100 pip trade. Keep an eye on this, 100%. It's a very, very nice looking trade. Pound versus the New Zealand dollar. Now, we have actually gotten an inverted left shoulder, inverted head, inverted right shoulder formation over there. Again, the blue line over here, that's my neckline that I have drawn. And I've also put in a smaller counter trend line, which is this yellow line going up. First touch, second touch, third touch is pending. So I'm gonna have to wait and see for pound, because we got some good news for pound last week. Ended up, all the pound pairs across the board ended up pushing up quite a bit. However, we didn't get that nice retracement that I was kind of looking for pound pairs, just yet at least. So potential scenarios, since we've broken out of this neckline as well, would be a tap off of the 38.2 Fibonacci as well as a retest of the neckline. for the potential continuation to the upside, or we can get a further decline below the neckline, potentially the market to drop and let's say tap off one of our key fib levels, for example 61.8, and then continue to the upside, something like this, where if we have something like this, a move like this, we would actually end up getting a, let me delete this first, a potential 1 to 2 to 3 to 4 to 5 move Elliott. Again, not the perfect Elliott waves that you would like to see that taps off the fib levels to perfection, but it's still within that wave theory. The market can still give us a very nice move up, impulsive move up. So wait for a retracement down for pound New Zealand dollar and potentially look for buys unless the next week we end up getting some bad news for pound. As you can imagine, it's 2nd of March now that I'm recording this video, 2nd of March. So Brexit is actually going to happen this month. So there's a lot of talks around whether we should delay the Brexit to try and make a deal, so we don't have to come out of the European Union with a no-deal situation. So expect a lot of random news popping out of nowhere that shifts the market in different directions. That's definitely something that I would be expecting for the next week. Keep an eye on the news and see how the market kind of reacts to it. If we end up coming out of the EU with a no-deal situation, I would be looking for big sells for pounds, and that would be myself. So that's definitely something that you would want to kind of keep an eye on. I don't want to talk too much about Brexit now, but just keep an eye on the news and see how the market would react to it. Pound dollar. Again, similar story as pound New Zealand dollar, where we ended up getting our inverted left shoulder, head, right shoulder formation over there. Again, blue line over there, blue trend line is our neckline of the head and shoulder. Ended up getting a break above that and coming back for the retest. And we got a long wick to the downside over there as well, where the neckline was formed. Now, if we don't get our impulsive move for pound at the start of the week, where pound just starts to rise, and this is only based on pure technicals, where all of these previous reversals over there, if I want to mark them, for example, that previous reversal right over there, this reversal zone over there, that reversal zone over there, all of these previous reversal zones, all of them have been broken to the upside, every single one. So pure technicals is telling me I should be looking for further buy opportunities for pound in general. On a smaller scale, let's say on the hourly time frame, we do have kind of this trend line as well. That's not only you can be a little bit give the trend a little bit of room to breathe. Not only the market came back down to test that neckline, it also gave me a retest of this trend line as well. Not a retest, sorry, I respected the trend line. There's potential scenarios that I'm waiting for pound dollar, provided I get very clear price action, is a clear rise straight away a clear rise. And I know I said I'm going to remain kind of bullish on dollar for the rest of the week as well. This analysis is based on pound strength, okay? So please don't get confused and say how comes I'm bullish on pound dollar and bullish on dollar at the same time. But a kind of better scenario for me to see would be a little bit further decline. Let's say taps off the key fib level from the previous higher low to the final high that was created. Give us a third touch of this trend line coming up, and then give us the next move up. Definitely something to keep an eye on. I'm going to be waiting for a lot of clear price action before I take any trades on pound dollar. New Zealand dollar, Swiss franc. This is kind of very simple analysis. It's purely based on trend lines, where we have a trend line coming down from there, first touch, second touch, third touch over there. That's on the 8-hour time frame. On the 4-hour time frame, we have the little counter trend line coming up, where we've gotten 1, 2, 3, 4, 5, 6 touches on that trend line. So now I want to see whether this kind of little break over here was a how can I say, a valid break of the trend line, or whether we are going to end up getting another push up. But if it is a valid break of the trend line, then I'm going to wait for a further decline move, potential retracement to retest the broken through trend line, and the continuation to the downside. So I am going to be waiting for potential sells coming for New Zealand dollar, Swiss franc as well, provided this trend line gets broken down very nicely. There's sort of zones that I would have to keep an eye on would be all of these previous reversal zones, let's say from that closure over there or the wick, even this zone over here as well, more important zone, where we can assume maybe something like this could happen for New Zealand dollar versus Swiss franc. It's just a matter of giving the market some room to breathe. Don't be too greedy to want to jump into the trade straight away as soon as the market opens. No, me personally, I'm analyzing the pairs now. However, usually I would wait until Monday night closure, and then I would look at the pairs again and see how the market reacted to my analysis after the 24 hours of the trading week, which is Sunday 10 p.m. London time until Monday 10 p.m. London time. New Zealand dollar versus US dollar, weekly evening star, look for sales. So let's go to the weekly time frame. The evening star that I'm talking about is this bullish candle, small bullish or bearish candle, followed by bearish candle, Mariposa closure. So that is a very, very clear bearish reversal signal for me. We can see on lower time frames we have actually formed another left shoulder, head, right shoulder formation. So it's kind of very similar to the analysis to New Zealand dollar versus Swiss franc. I'm gonna give this trend line a little bit of a breathing room. We can leave your trend line like this. And let me do it on the 4-hour time frame instead of 8-hour time frame. You can leave your trend line like this and wait for either a third touch, bounce, and sell somewhere at a key fib level when it comes up here. Let's say if the market drops down to this trend line, so I'm not going to leave my fib there. Let's say it drops down to somewhere like that. Taps off my key fib level, see if you get a rise to your 61.8 or your 38.2, and then take sell positions over there. Or you can wait for a break and retest of such trend line like this for a potential intraday trade to the downside. The first trend line that I drew was drawn like this. I put it at this wick because I give the market, as I said, a little bit of a breathing room. That we didn't actually get a closure over there. We just got a wick. So in my opinion, this trend line is valid, and we have indeed gotten a break to the downside. So it's just a matter of letting the trade come to you. Don't be too greedy that want to kind of jump into the trade straight away. See what sort of move you're gonna get, see what sort of retracement you're gonna get, and assume sell positions down. Now, as you can see, I've put my kind of final TP around the neckline of this head and shoulder, but because this is a large scale head and shoulder, we do actually have the potential for a bigger move down, for a longer term bigger move down. So depending on how the market reacts to this pair, especially the US dollar for the next couple of weeks, I'm gonna be keeping an eye on this pair and see if I can hold some positions over the weekend for a longer period of time. Depends on what type of a trader you are as well. US dollar against the Canadian dollar, weekly bullish engulfing, look for pullback and then buy. So this is my weekly candle, bullish engulfing. Previous week, we actually ended up getting a evening star formation with a Mariposa closure. However, we were getting closer and closer to this trend line coming up, and we actually formed, on a lower time frame, a very kind of big inverted left shoulder, head, right shoulder formation as well. That's why kind of last week I wasn't so sure of US dollar sells. I expected this move up. So we actually ended up getting a bullish engulfing candle for the past week. We can see on kind of any time frame, we've actually broken above the neckline head and shoulder, the inverted head and shoulders neckline, which is this blue line over here. So again, goes without saying, wait for some sort of a pullback, perhaps down to the neckline, and maybe a little bit further to that reversal area around there. And then assume buy positions after that. Definitely something to keep an eye on. Would be a very kind of nice trade to see. Not only we've kind of broken out of that neckline, we've broken out of all of that previous kind of structure zones around there as well. So it doesn't matter kind of how I draw my trend line around there. We've definitely broken out of that this bearish trend coming down. The trend has definitely shifted, and that's my personal opinion. Finally, let's have a look at gold as well. Now, last week, if I'm not mistaken, the week before, we got this massive 8-hour divergence on gold, and the gold was getting closer and closer to this trend line over there, which with a very good news for US dollar, the gold ended up falling ever since then. The gold market has actually collapsed by over 500 pips. Simple technicals on gold are telling me this clear kind of bullish trend that we have had, where we had the low, the higher low, higher high, etc., etc., etc. This clear move was actually broken to the downside, meaning what? Meaning our previous higher low was broken to the downside. This is a trend reversal signal. This is a signal telling us that the trend, the bullish trend, has actually changed in momentum and the market is likely to go bearish. So since we have actually closed below this previous reversal zone over there, and obviously the previous higher low, I'm going to be expecting some sort of a pullback and assume further sells for gold. I'm not really going to be trading gold that much until about Wednesday, Thursday. So it's NFP week as well, so be very, very careful. As I mentioned, US dollar high impact news, be very, very careful trading gold. Because with any sort of news for dollar, the gold market will definitely shift as well. That's all of the pairs that I'm keeping an eye on for this week. Obviously, there will be a couple extra pairs here and there that I might reanalyze, let's say Monday, Tuesday. And if I like the looks of them, I will be sending those on my personal Telegram. As I mentioned previously as well, usually I wait for London and New York session to see how the market has settled over the weekend, or London and New York session, let's say even on Tuesday. And I would wait until some of the more important news have happened to see whether they agree or disagree with my analysis as well. So it's just a matter of keeping an eye on a few different things and see if they all agree with each other for you to assume either sell positions or buy positions based on your analysis and based on the given pair. Always remember to wait for price action, wait for candlestick confirmations before you execute any trades. I will be sending updates for all of these pairs, and let's say if I look at any other pairs on my personal Telegram channel, I will be leaving the link in the description, so make sure you're on that Telegram channel if you want to get updates on these pairs. If you guys have any questions, please do not hesitate to contact me on Instagram, and I'll leave the details for my Instagram in the description as well. Let me know what you guys think of the analysis in the comment section below, whether you agree or disagree, and just let me know if you agree with the analysis, if you disagree, why you disagree with it, and we can definitely have a look at some other people's analysis as well and see if we agree or not, basically. Have an amazing week. Make sure to stick to your trading plan. Make sure to stick to your correct risk management. And let's smash it. Let's have an amazing trading week.